Okay, everybody, here we go. It is me, Gregory Mannarino. It is Tuesday, July 25th, 2023. First of all, how do you like my plant? I just bought this new plant. I love plants. I love trees. I'm kind of like I don't know, a little geek like that. Anyway, people, let's talk what's happening here. Number one, and right off the freaking bat, I want you to keep your eyes on energy prices. From everything I look at here, and I would be willing to bet that most of you would agree, energy costs are going to surge higher. And it's not just me, Greg Mannarino, saying this here. You got now the Wall Street super banks saying the same thing. Goldman Sachs just yesterday talking about crude oil. Look, the cost of everything is going to continue to rise. So forget about the nonsense, garbage, distractions, deception about inflation dropping or coming down. It's not going to happen in any way. You and I are clear as crystal that a few things are absolutely, for a fact, going to happen. All right, let's outline that just real quick. I asked this question just the other day, but let's re-ask it right now. How many of you believe that central banks are going to stop inflating? Do you believe that by some miracle, by some incredible turn of events, debts and deficits are going to start coming down? I would be willing to bet you're going to say no. There is no way on this earth, off this earth, or anywhere else that our loving, caring representatives are going to start paying down the debt or deficits, which are going to continue to surge because, again, here in the United States, we've become an import nation. We don't make anything here anymore. We don't export nothing. So the trade deficit is going to balloon. And with regard to the overall debt, forget about it. We haven't seen anything yet. This is going to skyrocket faster than ever before. And it has to do that in order to function. You know how the system works. The debt-based economic model demands that more debt be pulled into existence in greater and greater amounts just to sustain where we are. So when you hear some freak, one of our loving, caring politicians or whoever it might be talking about, reducing the debt, it's just a lie. All right. We're watching, as of late, the debt balloon faster than it's ever done before. And that's, again, just the way it has to work. So understanding this, that central banks must inflate. They must inflate or they die, and they will not die. They want you to die. They will survive. You understand? So they must inflate. Understanding they're going to continue to inflate. Understanding that energy prices are going to continue to rise moving forward, despite whatever you may think is going on with demand. It doesn't matter. You have to also factor in the fact that central bank issued currencies are deliberately under attack by those that create it. Okay, central banks are destroying deliberately by design the purchasing power of the currency. Period. So you want to be a dollar bill, you want to stay in the dollar, good for you. All right. You know my take on this. You should be taking your fiat central bank issued currency and converting that into hard assets, none more so than silver. That's my take on it. You're allowed to have your own opinion, but I think after you look into it a little bit, you'll see that I'm correct on this one. So that's where we're going. So keep your eyes on energy, all right? Crude oil, as we expected from a couple of months back, $80 a barrel, going much, much higher. That's going to affect the price of thousands and thousands and thousands of products. So you're going to reach deeper and deeper and deeper into your pocket. Again, as the storyline gets fist-fed to you that inflation is coming down, it's getting better. And central banks, don't forget, central banks, none more so than the Fed, because they really care about you. They're in the fight of their lives to stop inflation, which is still the biggest farce that has ever, and I mean this literally, ever been pushed upon the people of the world in the history of the world. Okay, central banks must inflate. They know that. They believe that via their the propaganda ministry they can sell you a lie, but you're too smart for that because you follow this blog and you know exactly what's going on here. I think we're pretty clear on that. So tomorrow is the day. Tomorrow we're going to hear from, the Federal Reserve, what's going to happen here. Again, I'm going to stand by this, a 25 basis point hike. It's getting baked in. And you can see this looking at the 10-year yield. This morning, the 10-year yield is just a shade under 3.9. I had to write this down here. The MMRI is sitting at 245.2. Now, as I said yesterday, if they can manage to keep risk in this market kind of where it is, I think the stock market has the potential to go much, much higher as the gap between the economy and the market gets even wider. How many of you have been with me for X amount of years? You see me show you this lovely thing. We're off the charts. We're off the charts right now. There's no connection at all. And that's the illusion. Remember what they're doing, especially with the Joe Biden-Stein re-election campaign here. People believe if the stock market is doing well, the economy is doing well. Nothing could be further from the truth. There's no connection here at all. So this mechanism more than likely is going to continue as we move forward, unfortunately. And a lot of people fall into the trap. Oh, look at the stock market. Look at my 401k. It's doing beautifully and lovely. So our economy must be booming, like President Imbecile is saying that it is. Oh, and he also is trying to convince you that inflation is dropping, for which it's not. See, listen for the wording also, how it's spun on the mainstream media, how it comes out of the mouth of politicians, presidents, whoever it might be. Inflation continues to rise despite the fact that central banks told us this was temporary, it was transitory, and they're raising rates because they really believe that by doing so, this is eventually going to stop inflation from rising. No, nothing could be further from the truth, and you knew this from day one because we covered it here. So yes, we're going to get a rate hike tomorrow. It's being baked in. We'll see how the market responds. Some of you believe the Fed is going to raise 50 basis points. I don't think so. I think the market would respond in a negative way. It would still rebound, though. Again, in my view, at least through the election, we're going to see a lot of effort by the Federal Reserve, in this case, to keep rates suppressed, to keep the MMRI below 250. We're less than 5 points away from 250. Actually, hold on a minute. Yeah, less than 5 points right now. This morning it was 245.2, so just about 5 points. Keep your eyes on the MMRI. Again, free to everybody. Link in the description of this video. So with regard to the market, this is what's going on. Stock futures are relatively flat. Again, market kind of holding its breath, waiting to hear what comes out of its mouth tomorrow. 10-year yield about 3.9, just under that. Relative strength of the dollar flat. Gold flat. Silver catching a bit. Bitcoin, cryptos flat right now. But I mean, what a gain here. You want to talk about Bitcoin somewhere around 30,000, 29,000. We were at 17.5 kind of recently, several months back. And I still believe this. I know a lot of you hate this stuff, and that's fine. You're allowed to hate whatever you want. But I sincerely, with everything I got, believe that cryptocurrencies are going much, much higher, especially in the scenario that you and I understand is eventually going to play out. You know what I'm talking about? The new people here? Well, let's outline it real quick. Debt market meltdown is going to crush world stock markets. Cash is going to move it's going to bleed out of the debt market, bleed out of the stock market, make its way into commodities, and yes, also cryptos. Speaking of commodities, I did put out a list in my free newsletter, link in the description of this video, just 6 exchange traded funds which would give you access to commodities. And if you, in my opinion, let's talk about commodities real quick. If you're looking to put some cash to work in a commodity ETF, exchange traded fund, you want to be looking at something that has a wide exposure to a whole bunch of commodities here. So just keep that in mind, and never put your cash to work in anything that you don't understand. Do your research on this. Don't just fling cash at things that you don't get. The best way to bet against the debt, become your own central bank people. You know what I'm going to tell you. Physical silver. Gold, I love gold. I love platinum, palladium as well. And I still don't see why those of you, even that dislike cryptocurrencies, don't, just a little bit of exposure there. I like to be diversified. You all know that, into a lot of different things. helps me sleep a little bit better at night. All right, people, pretty much that's it. So what's the takeaway from all this? Watch energy prices. Keep your eyes on that. Gain exposure to commodities, period. Stay long the market. Stay long the stock market, meaning bet that it's going to go higher as long as they can keep risk at bay. And you and I can check this by looking at the MMRI. Again, we know, we've seen it repeatedly where that first line of the sand is. It's 250, 250, 250 repeatedly. We go over 250, market falls, in comes the cavalry. Obviously, it's the Federal Reserve buying the debt, keeping rates suppressed. Meanwhile, they're supposed to be raising rates, right? Raising yield. Bond yields, they're keeping them suppressed, but they're supposed to be raising rates. Duh. I mean, anyway, it's just a game. All of this is a game, and nothing is what it seems to be. But you see, you and I, we can see straight through the dog poop. I can't say the other word because they hate that, but you maybe want to, tell me what's on your mind. All right, look, love you a lot. I'll see all of you later, 5 p.m. Eastern Standard Time for my live stream. Please have some questions ready for me. We're going to go over all this stuff together. I'm looking forward to it, and I will see you then, all right?